Hello everyone, it is February 20th, 2024. It is a Tuesday, and this is the video for today. So let's start first with our longer term market bias. And from the last video, and with a lot of videos, we still haven't changed our longer term bias. You can see that the rally is still strong. We've had some dips along the way, some compressions. These were eaten up pretty fast, and we are still very, very bullish. On a fundamental basis, nothing has happened in the last 2 weeks that was very major. CPI was hot, but we recovered those gains. PPI was also hot, and we had a slight negative reaction to that. This week, the two main items of interest are the NVIDIA earnings, which is coming out tomorrow after the close, and the FOMC minutes, which will happen in the middle of the day on Wednesday. I'm not too worried about the FOMC minutes. If you are day trading, you need to be aware of that because they will cause some volatility. There'll be some algos reacting to those minutes and the words that's happening over there. On a swing trading basis, it should not be a big deal. I would have passive orders set out. If you're close to a profit target and the algo volatility goes in your favor, you could have those orders be hit. So we are very bullish on the longer term, but we know that recently, as of the last 2 weeks, there's a lack of bullish catalysts this month. We got through most of the earnings. We got through the mega cap tech earnings. We got through the FOMC statement. We are through the holiday seasonality. So there's not much push in the market on the horizon. Because of that, we now know that our shorter term expectations should be a little bit tempered. In this week, February 7th, 8th, 9th, 10th, we were looking for the pullback. So because we were anticipatory, we were day trading the long side, waiting for the pullback, which came through the CPI. Now, CPI came, we rallied up and did form a double top lower high so far. So we want to see what's happening over here for this next week and the coming week. If you look at the chart, you can see that we haven't gone anywhere horizontally since the 7th. We're pretty much flat. That tells you that the market has gone up and down, but ultimately it has not gone anywhere. That is important. So our shorter term bias now is a little bit more neutral. We weren't able to get a new high, but we're still above this prior high here on the 13th. So there's a chance we could test that level again and we form in a compression range. That is one scenario to watch out for, and that would be the best bullish case. It shows that buyers are still interested at this level. Let me rephrase that. The most bullish case would be a compression near the all-time high. It shows buyers are very interested, and then we'll get that breakout to another leg higher. Something like here would be an excellent example where we break out to this new high, we're compressing at this level here, poke above it, and then we get this breakout to the next leg up. Here we have a longer compression where we test the bottom end of the range, test the top, make a higher low, and then we break out. So a bit longer of a compression. So if we get this scenario, this is far more bullish than if we get this scenario where we get a minor pullback and then the dip higher. Now, not the worst case scenario, but an additional scenario to watch out for is a far deeper pullback to AVWAP-Q around the 480 level, 481 it looks like. A deeper retracement means that buyers aren't that interested. So we know on that next leg up higher, the chance of it making a new high is much lower because we have drifted farther away from this level. We want to stay close to this level as possible because it shows that buyers are aggressive and they are engaged. The farther we dip down and the more aggressive, the longer the time of this move and the higher the magnitude of this move, it'll mean that we are not as bullish as this prior information suggested. And we want to look for support, still some out of the money, bullish put spreads, distance ourselves from the action because our market bias isn't as bullish as we expected it to be. So Again, we're still bullish on a longer term time frame. We're looking for a compression, a pullback, or a deep pullback. With the exception of some black swan event, we're not expecting the market bottom to fall out. Buyers are aggressive, and in a deep retracement, we expect them to scoop up the price because we expect it to scoop up the market because it's a very favorable price. Asset managers are not going to chase. They are going to wait for pullbacks to enter at good prices near a VWAP. So that is what we are expecting from them. Now, the shorter term bias here, as I mentioned before, a little bit more neutral. The price action this last few days has been mildly bullish, and then it started a little bit more neutral, and now it has shifted to bearish. So you can see we had a strong reaction here. Oops, well, that's the hourly chart. Excuse me. Strong reaction here, and then we kind of pitter-pattered around near this prior high, around the 500 level. And today we are seeing the move lower. So if this low breaks, it's a little bit more bearish. If this low holds and we test it and we bounce off, it's more neutral. And if we form a higher low, that's a little bit more bullish. So that's what I'm watching out for on this leg down. But again, you can see we haven't gone anywhere since the 7th. We've been shopping around in this range. So because of that, if our long-term market bias is bullish, our short-term market bias is neutral, it guides what kind of trades that we are going to make. So if I'm a swing trader, I'm not taking as many overnight swings. I'm waiting for the market to line up. I'm waiting for really, really great stocks, because if I'm wrong, I prevent myself from puking out of multiple long positions in the event that the market does have a more aggressive bearish move lower. We also don't have a lot of market tailwind, and that reduces our probability of success. We want to maximize our odds. So if we're not seeing a strong trending market, then we will not be taking a lot of trades. So my recommendation to swing traders is, one, be mostly in cash and have a few positions on very, very strong stocks. If you are in long call positions that are a month out like I am on the GPM trade, you can consider selling weekly calls against a position above your profit target. We know that the market won't provide much headwind. We know that the stock may not get the move that we are looking for. Or it might not make the move in the time that we are looking for. So we are able to offset some of the time premium decay by selling calls against the position. Now, if the stock does rally up very high, we do capture that money because it is above our profit target. So that is what I'm looking for in my swing positions here. You can also hedge with very, very weak shorts. Just again, be careful because this is a strong market. You saw that MU from a few videos ago did very well. Did not bounce with the market. And then at the first sign of weakness, we had our drop. Choppy stock, but it had a nice breakdown through the 50-day SMA. Now, let's zoom into what is happening today. Now, today we had a small gap down, and we had some steady selling in the first hour, and then kind of a weak follow-through in the first half of this bearish cycle. Now, we got this bullish cycle. We got some lift off, poked above VWAP. It looked good. We were stacking some green candles. Smack down here, started to fail, and then this was the key bar right here at 11:30. You can see we had the LRSI cross down. 1OP is about to cross down. We erased all of these gains. We broke through VWAP. So we knew from here that we wanted to see a much stronger leg higher for us to be more bullish. If we did not get that strong leg higher, then we had to favor the short side. We also didn't want to chase shorts in the open because it was a gap and go down. We know that gap downs typically provide some good buying opportunities. and a gap and go down as well, some of the move has been realized overnight. So you're going to be chasing a little bit on these stocks. So my personal recommendation for day traders today was to find some relative weak stocks, see how they hold during the bounce. We want them to be at the low of the day, and then you can ride this market move lower and take some nice profits on those positions. So this is the key that you're looking for on your relative weak shorts. You want them to be close to the low of the day while the market is rallying. Now, the market components for the day were quite bearish. Tech was pretty weak. Mega cap tech was pretty weak. Flight to safety stocks was up. VIX was up. There weren't a lot of sectors that were very strong outside of staples and utilities, which are more defensive sectors. A lot of selling in tech. Now, we can day trade some of these tech stocks, but we have to be careful because a lot of tech stocks have very, very strong charts. They've been leading the move up. So we want to find very weak daily charts and very weak M5 charts. So now that we have our alignment here, day trading the short side today, swing traders, I would not be taking any swing positions today. Let's go over the pick from the previous video, which was BSX. And you can see the power of a grinder stock like BSX. So yesterday on the 16th, or last market day, BSX had a nice move higher, really nice move higher, but sold off pretty hard. At the end of the day, it was not relatively strong to the market. Today, however, market gapped down, sold lower, BSX flat, nice long candle in the open, holding all of the gains over here. Excellent relative strength. We can lean on this upward channel, this very narrow upward sloping channel right over here. Now when the stock gets extended above the channel, right, hits the top part of it, we know that we can take some profits. But as long as we have this bullish channel here, we are in good shape. So if you bought BSX, you would get either shares or a longer term position, perhaps a month out or even 6 weeks out. You can ride over here. BSX also should have weekly calls. Let me check. So if a longer term, there's not a weekly calls. Okay, so you cannot sell weekly calls against that, but a nice longer term position on the 15th. You can ride that out and take some nice profits, probably at the 67.50 level. Get a nice ATR move here on that stock. So BSX is doing well, and we still like it. Let's look at the other positions that we have on. Ally, again, we've had this one for a while. Long green candle in the open here, holding all the gains during the market pullback. Lots of heavy volume. It's really confirming this support. And if I put this level, perhaps over here even, there's a lot of support at this area. You can probably draw it in a couple of ways here. Here, yeah, something like that. A lot of support at this level. Holding pretty well during this market decline here. It's been relatively weak, but this is a nice, strong day of gains. So, again, if you're more neutral, you could sell some calls on Ally. Let's see if it has some weekly calls. Yep, you can sell some calls against the Ally position if you want. So here I think our target was probably something like 38. You could probably sell something like this high, the 38.50 calls on this stock, and you can make some money over there. So you can get some pretty decent credit, and then if it hits that level, then you can take your nice profits. All right. Second one we had here was JPM. JPM, nice day of gains, and it has held those gains very well while the market has been going down. Market doing this, JPM doing that. Excellent relative strength here. So I'm in JPM. I still like it. Considering on how the market closes today, I may consider selling a call against the position to take advantage of the time premium decay. Crowd not doing so hot, but you can see here how it formed a higher low when the market was forming a new low of the day. So we are holding this upward sloping trend line so far. I'm also going to lean on this horizontal support right here on crowd. A little bit more bearish than I would have liked, so I have to temper my bullishness on the upside. I probably will take some small profits as it tests this high from the 15th and look to get out of a losing trade with a small winner. Now let's look at CFLT. CFLT took a little bit of hit with the tech selling. Still a very strong daily chart overall. You can see how it tested the gap, tested the 8 EMA, AVWAP-E, and has held up pretty well. Higher low again with the market, and have set a low on the high of the day. So some spooky selling earlier in the day, but we don't panic out of the positions. We know we have a lot of time on the options. We have a strong daily chart to lean on, and it has held up pretty well during the market decline. I'd want to see it break through this next level on a market rally up. So market resistance that we're watching out for here, 490. This level right here, 480, is the market supports. In terms of resistance, I know I mixed that around, but this high right here from the 16th and the all-time high are the resistance levels over here. What I also did was drew a trend line alert with this double top lower high on the H1 chart. So if we get a nice breakout through there, then we could probably get a nice trade with a market trend in our favor. All right, so we're favoring the short side. How do we want to day trade this? Well, let's look at a couple of tags that I liked earlier in the day. So first one, this is a trade I took, and it didn't quite pan out as well as I wanted it to, but I will walk you through the setup. The first one was Oracle. So let's look at why I liked Oracle early in the day. And we're going to go all the way here, right around 1120. So you can see here, market had a strong move lower and then a bounce. Oracle had a really strong move lower through double SMAs, the prior day low, making lots of nice moves. And the daily chart was showing a bearish reversal. We rejected off this level right here. A lot of resistance overhead. Broke through all of the SMAs. Now we had AVWAP-E lower, which means that I didn't have a lot of space, and I would like to take a day trade on this. Nice, steady red candles, heavy volume, good R volume as well, nice relative weakness. Oracle is looking really nice. I was weary of this bullish hammer. I didn't like this bullish hammer, but I figured with a market tailwind in a weak stock, we could take out this low of the day. That was my hypothesis. Now, the market did what I wanted it to do. 1155 from 1120 to 12, we had a nice steady move lower. LRSI crossing down. Oracle had a bounce off this level while the market was doing what? Here's the 1145 candle on the market. Here's the 1145 candle on Oracle. That is a sign of support. So when I saw this, I said, okay, I'm still bearish in the market. I'm less bearish on Oracle. I'm going to take some small profits at this support, and I'm going to look to get in another trade. It did not do what I wanted to do. So when Oracle had this red engulfing candle, 1155, right, the market's starting to sell off. Look at the 12 o'clock candle here. I mean, there is some buying going on. It's offsetting the selling pressure, and you can see how it's gaining relative strength. So took the small win on a losing trade, and I got out of it. Now, market's compressing again here at this level. On this next LRSI cross down, 10P crossing down, you could probably get a really nice entry for a short. So Oracle was a good setup, but it did not pan out. And you can see here how it's been resisting any move lower. I'm going to show you what an ideal M5 chart would look like here. Here's AMAT. You can see here, nice move lower, compression. This is what Oracle should have done. It should have broke through, steadily sold off. A little bit of a bounce here on this LRSI alert. We can see a nice steady selling in this stock. Now, I don't like the AMAT D1. I think it's fairly strong, even though we had a lot of selling on the post earnings. It's testing this horizontal level right here, and the 8 EMA filled in the gap. Not really my ideal D1 setup, but I just wanted to show you what a great M5 setup. Here's another great M5 setup. Lift. You can see just the absolute steady selling in this stock. Right? Pauses here, and then steady selling on the downside, just grinding lower. Accelerated move here, just grinding lower today. Again, the Lift D1 chart, not really the one that I want to short. It's pretty strong. This could be a pullback. It's still pretty volatile after the earnings. I don't know what's going to happen. But here's again an example of an ideal M5 chart on the price action side. You can see the volume is pretty low, but the relative weakness is very, very nice. So what do some great D1 charts look like? First one I like a lot is PEN. Now PEN is a little bit overextended, but you can see how it's not been rallying with the market at all. Broke through a lot of major levels. This low plus trend line coming here, a couple of low minus trend lines here through this gap. The next piece of resistance would be this longer term low minus trend line, which is a long ways away. Also through this minor level of horizontal support at 841. You can see how PEN, again, this is what I should have done with the market. Market tanked, PEN also started to tank. Now it gained some relative strength here, and you had some chance to get out of the trade when it did not drop with the market. But this is what I was looking for Oracle. I wanted it to break through like this. Another one I liked early in the morning was Wolf. Now Wolf is a little bit choppier, but you can see how it has been a very, very bearish chart. Post earnings, tested the gap, failed the gap, got rejected, and now it's through the AVWAP through this trend line here. Nice little bear flag. And now we are testing these lows. So Wolf is pretty nice. I didn't like this pop up over here, and it failed to make a new low of the day when the market made a new low of the day. So it did not stand up to scrutiny, right? This should not have happened on a pretty strong stock. But the move earlier in the day and the D1 chart is very ideal. You can see why it's tough to find really high quality picks. You might have some picks with a great M5 chart, some picks with a great D1 chart, but not a lot of picks have both. Even when they do have both, you have to adjust your bias, like Oracle. Now, my short pick of the day would probably be 2-2 if it was not for this little gap that's providing some support over here. You can see how it has a nice pop up here, chops for a bit, and then drops lower. So you want to enter on these LRSI alerts. But you can see how 2-2 has some nice volume here, low volume on this move up, and some high volume on this move down. A weak post-earnings move through multiple AMAs, the AVWAP-E, through the gap entry over here, with some room to the 200-day SMA. So if you can clear this gap, fill in this gap here, that would be a nice short. The price action on 2-2 is pretty choppy, so you can't expect an immediate follow-through. But this is a pretty nice setup technically outside of the choppy price action. So if I had to give a pick for today, it would probably have to be a short, given what the market is doing and given that we want to balance against our longs. Now, one fantastic long today is Abbott. You can see how it broke through this compression, through these major trend lines, has been grinding up higher today while the market has been going down. Abbott is fantastic. I really like this stock. I would take it if it wasn't for the fact that I already have a few longs right now. I don't want to be in too many longs in a neutral market. So it's something that I'm going to keep my eye on. I'm going to watch for what it does until the end of the day. But it's just not the conditions that we can go long on right now. The market is below the prior day low. We're market neutral in the short term. This is an excellent D1 chart, but the right strategy could be selling an out-of-the-money bullish put spread if you really feel like it, versus taking a short-term swing on a stock like this. It does grind up. It's been very strong. You could make a case for it. I'm still on the fence on it, but I'm leaning towards not taking a swing trade right now. Red Royal Flush has a lot of great picks. Zoom was a nice breakout that you could have traded from the prior market close on the 16th. Adobe has made a nice drop, but is finding some support at the 200-day SMA. It is also quite extended. So there's not a lot of swing shorts I would take, but here's the setup that I am looking for. I'm looking for a stock that is weak here during this pullback. So let's go to our bear day trade search here. And let's find a stock with some decent average daily volume here. Good liquidity here. Okay. And let's see what has some really great relative weakness during this market pullback. So that's how we're going to find a great day trade. So BTU, we have this trend line coming into play. I'm not interested. HR, so we need to find a quality D1 chart here, which we can see in our LRSI states. So this real estate is looking pretty weak, broke through some horizontal resistance here. Let's look at LSPD. This is a nice bear flag on the stock. In the gap, room to the gap fill. Nice steady selling today. Pretty weak chart. Okay, LSPD is our best pick so far. Let's keep looking. PSX, I believe this is an energy stock. Now this is a pretty nice compression break to the downside on PSX. The price action has been a steady grinder. It's a pretty strong stock. So I'd probably do an overnight swing at the most if you are very, very bearish. You can see how the stock has moved up here. Strong compression around the post-earnings AVWAP-E. Broke this compression to the downside with some room to the 50 SMA over here. Nice bearish reversal search. If you look at the HA candle, we have a flat bottom HA candle. Gives some additional confirmation to the move. Happening in pretty heavy volume, grinding lower. What I would do is wait for a pop-up in the stock and then take a short on that. I like PSX quite a bit, actually. Let's keep looking. PAGs. Let's see PAGs here. Too choppy. Not anything major. I'd want to see it clear its 50 SMA at least. So what I'm going to do here is set an alert at the SMA 50. So if it crosses below that, then I'm interested in that position. Let's look at Zillow. Zillow also more neutral. I want a more bearish chart here. More bearish long-term selling. DTD, strong move, but really this is a great also M5 chart. Again, would not want that for my trade. I want a really nice, weak, bearish chart. COP, HR, we already looked at. So I have two here. I'm going to put on a custom search, and we're going to find a bearish pick. So what I'm going to do is the following. Just set a couple of basic criteria. We want an average daily volume. Let's put up 1,500. And at least a price of $10 gives us some idea. We don't want any ETFs. Action today. Okay. we want a stock that is probably below its SMAs. So below all the SMAs, we want a stock that's probably below its AVWAP-E. Let's see what we get over here. 135 items. Okay, so we got a couple of picks here. Let's make this lower. Let's see it. I want a stock that has relative weakness to the market. We got something for DE. We'll check that later. Okay. And let's do this on a couple of time frames. Relative weakness here. Very nice. So this has a little bit more momentum. Let's actually go to an H1. I like using this H1 here. Okay, so these have some nice bearish momentum. They are weak to the market. Now let's see what they're doing today. I want a stock that should be below its VWAP and below its prior day low. And a stock that has decent R volume. All right, so it's a little bit of a narrow list in my opinion, but let's see what we get. So we have DBX here. You can see the quality of the picks has really gone up. Excellent breakout here. A little bit overextended, but really nice breakout. FLNC, also a nice breakout, but fairly choppy stock. Don't like it as much because these breakouts don't tend to have the follow through that we like. GME, I avoid the meme stocks. Look at HR, INMD. It looks like there may be some news on this one, but this is an excellent breakdown on this stock. This news may have followed through. It is a choppy stock. Yeah, it looks like a news move here. So what you'd want to do is set your alert at the low of the day here, because we have not managed to break through since that opening candle. Pen Roku, very weak. I believe there's some news related to Amazon's purchase of Vizio that is negatively impacting the stock. It has been compressing though, not trending, so not the type of price action I am interested in. Wendy's, very choppy stock, broken down here. Not a fan, too choppy for me. Twillo I'd already mentioned. Oh, I've not already mentioned Twillo. I have not. I was talking about Tutu. Twillo is quite nice, actually. Good breakdown from the SMA with follow through. A little bit overextended. Heavy volume post earn. This is a very nice stock. Yeah, great steady selling. Below priority low, below VWAP. Volume is okay today. Kind of lowish volume here, but excellent price action. And finally, we look at our good boy LSPD. Yeah, I think I am going to go with LSPD. You can day trade it right here. You can see how it's made a new low of the day. Market has a nice long bearish candle. Steady grinder. Good volume. Bear flag on the D1. Below all the SMAs. We have some minor resistance here. This low at 1350. So if we can clear this low and the market's looking a little bit weak, you can consider adding. There is some resistance, or sorry, some support, probably at 1250. So you have a nice dollar of room. High ATR that's climbed up about $1. Yeah, LSPD is going to be my pick of the day, my short. So let's add it to our YouTube picks. And we will conclude the video. Thanks for watching. We'll catch you on the next one.